everyone, welcome back to our inflation night. Obviously, CPI is going to get released, very important CPI. So welcome back to news trading session number 3. Just checking if the audio is coming through okay. Should be okay. Let me know on the chat if there's any issues. But yeah, let's get started with news trading session number 3. This is going to be our inflation night, and CPI is going to be released in 30 minutes time. So my name is Vida Jaro. Let's get this started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility, and market reaction to news can be swift and unpredictable, which leads to higher trading risks and delays in order execution, and potentially the spread widening up as well. Liquidity is going to dry up, right? So be very attentive when determining the volume of your transactions and consider all possible risk factors. It is actually very interesting tonight. Let me just pause here for a little bit. We'll go through the chart a little bit sooner because there are a couple of things we need to take a look at, especially in the movement on the Euro USD. Right now, it's not actually creating that corridor of volatility where we can actually deploy this straddle strategy where we have to buy some and sell some. So I need to discuss that a little bit closer tonight. All right, so a little bit about myself. My name is Vida Jaro, and I've been trading full-time for over 20 years and professional trading coach and technical analyst since 2007 for a couple of brokers in the US, Australia, as well as Japan. Expert in the Ichimoku Kinko Hyo technique, which is a Japanese charting techniques, and I also own a company called Zenifix, which is an independent market consulting company. So I've been invited as a guest speaker at Trading Investing Expo across Australia, Invest Fair in Singapore, as well as the ATA and the APTA conferences. APTA conferences, which is the Australian Professional Technical Analysts Association and the Australian Technical Analysts Association. All right. Okay. So as per usual, there are going to be bonuses for participants. There's going to be a promo code TW deposit bonus. So make sure you are using that code when depositing into your Octa trading accounts. And you should have access to the private Telegram channel if you have registered for our live sessions before. And if not, please contact customer service. More than happy to provide you with the Telegram link. Otherwise, if you registered through the website, you should be receiving that link through your email. All right. Let's go. Yeah, let's go. Okay, so this is the code. It's non-farm 2024. I'm actually super excited tonight. It is actually a little bit tricky in terms of trading tonight. But yeah, non-farm 2024, that's going to be the code for you guys to double your deposit bonus. Make sure you use that on the Octa's website when depositing into your trading account. Make sure to include the promo code, which is non-farm 2024. This is valid until the 31st of December 2024. Okay, so very briefly, as per usual, we're going to go through some of the theories for those that are new and to trading and just wondering what are we looking at, was it so important and whatnot. But yeah, we will cover a little bit of a theory first. I'll try to get through this as quickly as I can because I do want to discuss the potential outcome for tonight and also the kind of the dynamics in terms of what other traders are thinking right now, what has actually been going on ever since the last NFP, which is last Friday. All right. Okay. So inflation. What is inflation? Inflation is the rate at which prices for goods and services rise, right? And most commonly used inflation indices are obviously the CPI, the Consumer Price Index, and we're also going to be looking at the core CPI or the core inflation numbers, right? So a little bit of a note: inflation, it's inevitable, right? It's it's going to happen, and as time goes, we see GDP grows, the economy continues to grow, a country continues to grow in size. At the same time, inflation is always there to kind of devalue our currency or our cash. Basically, that's that. So inflation is very important because if you live in the past 20 years, I would assume that you guys are at least 18 years old to be able to trade. You'll see that the value of the money that we have, 18 years, 20 years ago compared to now, it is a completely different story. All right, early 2000s, things are quite okay. All right, it wasn't that bad in terms of how goods are actually priced. But now, price for everything has basically gone up, and the best case scenario that I like to always use, it's the price of a flagship mobile phone, right? 20 years ago, in terms of a flagship mobile phone, we basically don't even have a smartphone 20 years ago. But once phones starts coming out with their flagship models, typically it is below $1,000, right? At least in Australia, it is below $1,000. Like, if you pay $1,000, you're gonna get like the best, flagship phones and whatnot. But nowadays, what is 1,000? It doesn't mean anything, because the flagship phones right now, at least in Australian pricing, we are looking upwards above 2,000. Just for example, we just got the Samsung Z Fold 6 that was released yesterday. We had a little bit of a price increase on that, and prices are kind of breaching the 3,000 levels at the very least in Australia. Okay, so just a comparison. 20 years ago, top of the range phones, that's about 1,000. Right now, it's nearly tripled, right? Simple as that. So 20 years, goods for everything has basically gone up. I'm just giving you one example, but you should understand, and you should understand the pain on this. So if you keep your cash from 20 years ago, it would actually lose its value. And this is why people are actually turning into the stock market, into all the other alternative investment, kind of to hedge the inflationary growth, right? They want an investment that goes faster than inflationary growth. Okay, so I'm spending a little bit more time so you guys get a little bit of an understanding of what inflation is. Okay, so what is the CPI? CPI is a critical indicator of pricing pressures in the economy. It provides gauge of inflation, obviously. Consumer price index, it's how much we pay for goods as a consumer, all right? So forex traders monitor the CPI because it can lead to changes in monetary policy conducted by the central bank, which can either strengthen or weaken the currency against the rivals in the market. For tonight, we're looking at the US dollars. And we had the testimony from Jay Powell the past 2 days, and he's leaning, he's been commenting, and, even though he says like, all right, we want more data, we want more proof, but he basically, the FOMC has basically changed their language, right? So language now is that, yeah, we are ready to cut. We just need a trigger with this economic data when to cut those numbers, right? And one of the numbers that they look at is obviously going to be the CPI. And this is kind of the general number that everyone out there would consider as, okay, if CPI drops significantly, then yeah, the FOMC is going to start cutting the interest rate because inflation is coming off. And the reason why FOMC or any other central banks out there needs to hike the interest rate, one of the main reason, not the only reason, is to fight inflation. So the logic here is, why does price of goods and services go up? It's because more on the consumer behavior, right? If someone is working, they earn more, they are likely to spend more. And if the interest rate is low, what people would do is actually go to the bank and say, hey, you know what? Your interest rate is so low. Can I take a loan out? Because I want to get something. I want to buy a house. I want to buy a car and whatnot. So lower interest rates, it kind of makes everyone contribute to the economy, make everyone spend in the economy. And that way, it will push the economy. It kind of kicks in the gear there. The economy is going to grow because everyone is spending. Everyone has that extra wealth, and with that, obviously demands are going to go up. Once demand starts going up, prices for goods and services also goes up with it, i.e., the inflation goes up with it. So the logic here is that if central bank starts cutting off their interest rate, starts increasing their interest rate, it prohibits people from, taking new loans because interest rate is high, right? So that's kind of an extra consideration. So what's going on right now in the US, and let me give you a little bit of a context, is that inflation was high, and the FOMC has been rapidly increasing the interest rate. I would say it's pretty quick, right, in terms of how they raise their interest rate to stop everyone from spending. That's basically it. What they're doing, in essence, is slowing down the gear for the economic growth. If they tighten too much, or if they hike interest rate too far, it will slow down the economy so much that it might actually fall into a recession, right? So we had seen data coming out from the US, and data from the US has been, it's still strong, but we're kind of losing a little bit of momentum there. Inflation has been coming off, unemployment has been on the rise. The latest data on Friday, we saw that happen, right? The unemployment rate picked up past beyond 4% to 4.1%. So yes, right about now, the U.S. economy is, what the FOMC is doing for the U.S. economy is kind of balancing it out, right? So they want to start cutting interest rate, but at the same time, they need to control inflation. And also, they don't want to tighten too far that the economy goes into a recession. So it is a fine balance, and this is why it's important to look at what's going on and understand the context for what we're looking out for tonight. Okay? So CPI, again, let me just break this down. It measures the cost of living. All right, we just talked about that. Includes broad range of goods and services purchased by consumer. Includes international personal consumption items. So if you buy something from overseas, you import it to your country, that's going to contribute to the CPI, all right? Okay. Scope excludes changes in interest rate or costs. So this is the consumer side. So that's CPI. That's what's going to be released tonight. Tomorrow, we're going to get our PPI. Now, PPI, it measures real growth in output, includes items produced for personal consumption, does not include imports, encompasses services with prices, including an interest rate component. So CPI is us, everyone, right? Everyone in the country, in terms of how things are getting expensive, that would be CPI. PPI is how much it would actually cost to produce the items to be sold. Right? So that's the producer's price index. So CPI, consumer side, PPI, producer side. Simple as that. And the name says it all, consumer, producer. Okay? All right. So the other thing that we need to take a look at is the core inflation. Now, core inflation refers to the changes in price of goods and services, right? Same thing, excluding those from the food and energy sectors, because these items are very volatile. They tend to be more volatile. Now, in terms of foods what's going to be excluded? Fresh foods are going to be excluded, all right? Because fresh foods are going to be seasonal. Sometimes we got this. Sometimes if there's a prolonged drought, when we don't get anything in terms of harvest, right? If there's flooding, for example, then prices could go up. So it is a little bit more on the volatile side. That's not going to be inside the core inflation, right? The core inflation is going to exclude that. The CPI will include everything. Okay. And then the other thing would be, when we talk about the energy sector, in particular, it's actually the gas prices or oil prices, petrol prices, right? Depending on where you are, sometimes you call it gas. We don't call it gas. We call it petrol in Australia. But in the US, I believe they would just say it's, gas, right? But those are going to be excluded because how the oil market is, very volatile, very easily impacted by any geopolitical tensions. So those are going to be excluded, okay? Now, typically core inflation is obviously determined using the consumer price index. It's basically CPI minus all the stuff that we just talked about. That becomes the core inflation. So CPI is what we call the headline inflation. The year-on-year CPI is what we refer to as the headline inflation. The core inflation, it's basically the main focus by a lot of central banks, because what they want to see is, what is the underlying inflation, right? What if we exclude all these extreme prices in terms of volatility? What are we looking at, right? And in terms of central banks, typically they have a target of 2 to 3% in terms of their inflation target range. This is actually going to be measured off the core CPI. Okay? So CPI and the core CPI could show two different things. And for tonight, we're actually anticipating two different things. We are looking at the core inflation to remain flat at 3.4%, but headline inflation, we're expecting it to come off a little bit, okay? Okay, so let's take a look at the numbers, and we are ahead of time, don't worry, we have enough time. So the core inflation, we're looking at 3.4%, the year-on-year, right? I'll explain the year-on-year and the month-on-month. So let's talk about the YOY, year-on-year. Depending on the news site that you're getting this, sometimes it's called inflation, sometimes it's called consumer price index, but they're basically the same thing. So any inflation rate is basically the consumer price index. Okay, so it's just an alternative name. So if anyone tells you, hey, we got CPI, and then everyone tells you that, no, we're looking at inflation, they're both the same thing. They're looking at the same thing. Okay, so let's take a look at the core inflation first. We're expecting core inflation to remain stable at 3.4%, right? In terms of growth, we are expecting monthly growth to remain also at 0.2%. Now, the bottom one is the headline inflation, or the year-on-year CPI. And previously we had 3.3%. We are expecting this to drop to 3.1%. So we're expecting inflation to cool off. And if the inflation does cool off, if we see the inflation number go down, then yeah, right now the FOMC, if we take a look at the market watch right now in terms of the Fed watch tools, right, by the CME, market is pricing in for a 65% of a possible rate cut in September and one more in December, right? So market is still expecting 2 rate cuts, one in September and one in December. If the inflation rate comes in as per consensus at 3.1%, initial reaction to the market is that everyone's going to say, you know what, inflation has come off. Comments from dovish comments coming up from the FOMC this week and last week, points to, rate cut to happen, right? This is already July, August, September as the anticipated earliest rate cut from the FOMC. So 3.3 to 3.1%. However, I do want to point out one thing in terms of what the market has, is doing right now. I want to talk about the Euro USD just more as a reference point to everyone else, right? So we have seen the Euro USD climb up in value, right? In the past, this is post NFP, right? So we'll measure at the lowest point at the NFP and then to where it is right now. We're looking at a gain of, oops, wrong tools, I'm sorry, price range, there we go. So we have seen market gain about 63 pips. It's not huge, right? But considering how range bound the market is for the Euro USD, 63 pips gain. It's basically the market potentially pricing in for that drop to 3.1%. So I want to talk about a couple of scenarios that we should consider. Number one, if the number comes in as per consensus, this is actually very dangerous because we don't know the percentage of the market that has already priced in for that drop, right? If it drops to just 3.1%, market is could, all right? I'm not going to say going to, but I'm going to say market could react in a funny way, right? Market could say that, yeah, it's at 3.1%. Market has already been pricing, everyone has already been pricing that because the Euro USD has already gained, the Pound USD has already gained, right? And the dollar has been flat a little bit. So everyone might say, we have already been pricing it for a 3.1%. So it could be a non-reaction. We don't see a huge volatility, or we could actually see the opposite, where we could actually see people profit taking out of their shorts on the dollar, right? If they went long on the Pound USD and the Euro USD, maybe they'll say, you know what, we're going to take it out. And it is very important right now, considering where the Euro USD is. We will talk more about that in a minute. The other scenario is, what if the inflation rate doesn't drop to 3.1%? What if it drops, but it drops to just 3.2%? The market could have been pricing everything wrong. It would actually be considered as a number that's higher than consensus. It could boost the US dollar. Scenario number 3, we could see inflation remain flat at 3.3% or at 3.4%. That's going to give a major boost to the US dollar if inflation actually picks up, because everyone is pricing in for inflation to drop down. Everyone has been selling the US dollar. If inflation goes up above 3.3% or maybe even flat at 3.3%, we could actually see the US dollar stronger. Scenario number 4, this would be the most unlikely, but if it happens, inflation could drop below 3%. And if this happens, we're going to see a massive sell-off in the US dollar. We could see the Euro USD and the Pound USD rallies up really quickly. You know, in terms of how quick, we are talking anything above 50 pips in terms of initial price movement. If inflation drops below 3%, this is going to be a huge surprise to the market. Everyone's going to cheer for it. The stock market is going to rally tonight if it does happen, if inflation drops below 3%, because that would give the green light to the market that says, you know what, FOMC, you have to cut interest rate. Okay? So those are the expected number for tonight. Once the inflation rate comes out, then we will discuss the monthly rate. Hopefully we don't have any downward revision or any revision to the previous month, because that would actually complicate things a lot. Okay. So let me go to the chart here. And as per usual, I want to talk about the Euro USD, which is good right now. This is coming off before the numbers. And what we're trying to do, I'm actually going to hold off for about, a couple of minutes. But I want to point out a few things in terms of where we are with the Euro USD. And let me just bring this onto the hourly time frame. I'm going to highlight one level for you. That's going to be that 1.0850. Now, 1.0850 is going to be the resistance. We talked about this on the Outlook this week, earlier on Monday. But as a reference point, let me just bring you to the chart that we used on Monday, right? What happened here is that we anticipated a little bit of a potential resistance at 1.0850. Some position traders are actually taking a short position. They have orders at 1.0850. So this is going to be a tough resistance that's actually defended by a lot of traders today. Because the anticipation here, the way we look at it from a technical perspective, 1.0850 to 1.09 presents a potential resistance for the Euro USD. Any rallies to that level could actually face a little bit of a challenge. Now, obviously, I'm going to give you a little bit of a preview. What could happen if today the market get rejected at 1.0850? If the market rejects 1.0850 today, then next week we might actually see that sell-off in the Euro USD. If we measure the correction that we have on the daily time frame, the reason why we actually discuss this on the weekly outlook as well, it comes near to 78.6%. It exceeds 61.8%, but it is a key psychological level. It is a range of potential sell orders at 1.0850, 1.09. That's not going to impact us for today, because we are going to react quickly to the market, and ideally we want to get out of the trade as soon as we can, right? Don't fall for this, because that's a huge risk right now unless you're okay with that risk. If you want to short sell the Euro USD before the news gets released, your stop loss is going to be about, it's only 10, 15 pips. You can do that if you want, but once the news get released, we might get whipsawed as well. So there are risks attached to shorting it right now. It's just too close to the release. All right. So Euro USD, let's go to the 15-minute time frame. Let's start positioning our buy stop and sell stop. I'm gonna go for a buy stop on 1.0860. All right, about 1.0860. In terms of the sell stop, I need to have this a little bit lower, about 1.0840. This is already too close for comfort. But Euro USD, we have buy stop 1.0860 and sell stop 1.0840. As per usual, once one of the orders is triggered, immediately cancel the other order. Okay. The Pound USD, I think we can fit this in. I do want to have my sell stop a little bit lower. I'm not too comfortable at the current level. I do want to have it a little bit lower, about 1.2865. In terms of the buy stop, we are okay with that high that we have just now. We are going to have it about 1.2885. Right, 1.2885 for the buy order on the Pound USD, and sell, it's going to be at 1.0860. Gold, I'm actually going to sit out gold. I'm actually going to trade gold after the news is going to get released. Okay. Aussie USD, we're not going to be able to trade the Aussie USD, so that's unfortunate. The dollar Japanese yen, this one here, we are actually looking for a limit order. We're not going to be looking at a buy stop right now for the dollar Japanese yen. So dollar Japanese yen, we are very particular right now. About 161.30, 161.25, we want to have a buy order, 161.25. If you want to go for a little bit lower, you can go for support to a 161. I don't think that's going to happen. So we're going to be looking at the range between 161.30 and 161.25. I don't like shorting the dollar Japanese yen at this point in time. Interest rate differentials just doesn't give me that leeway. Okay, so dollar Japanese yen, I do want to use a buy limit. So buy limit, I'm going to place this at 161.25. Okay, just about there. And this needs a stop loss, right? And the stop loss needs to be at 161, about 160.90. That's pretty much it. Target level for this one can go really far. We're looking at 162 at least, and this is going to give you a really good risk reward ratio, right? It is going to give you 1 to 2 at least on the risk reward ratio on dollar Japanese yen. So dollar Japanese yen, a buy limit. I'm not going to go with a straddle on the dollar Japanese yen, so be very careful with that. Once the order is triggered for the dollar Japanese yen, you can follow through with the euro yen and sterling yen. I'll keep this on the side for now. Okay. Nvidia, we're probably going to be looking at that. Nasdaq, you can trade Nasdaq. I think this is actually prime for a potential breakout. So we're going to go with the hourly time frame, and I want to have a buy stop 20,725. All right, that's going to be our buy stop, and the sell stop is going to be 20,650. A little bit more range out of this because we got a corridor of volatility. Yes, about dollar Japanese yen. What can we do with the dollar Japanese yen? We're not trading a breakout on the dollar Japanese yen. In fact, the whole scenario with the dollar Japanese yen is, if we consider this, obviously this is kind of pushing a little bit higher, but let me go in and give you a little bit of a projections into the dollar Japanese yen. You know, you guys that's been following my trades on dollar Japanese yen, you know, you guys saw how bullish I am on the dollar Japanese yen. I'm just bearish on yen overall, right? Outlook, we mentioned potential bounce of close to 160. That's a bounce of 23.6%. So this could go a little bit higher. This could still push higher for this week, closer towards 163, about 162.50 on the resistance to on the weekly pivot. We still have time. We could still achieve that. But I do not want to go short dollar Japanese yen, regardless of what the data comes out, because it will be just a noise rather than anything else on the dollar Japanese yen. All right, data is going to get released anytime soon. But yeah, any questions? Hopefully we are able to get out safely. Hopefully we don't get whipsawed. You know, the past 2 live tradings that we have, we got whipsawed, right? So I'm sitting out on gold at this point in time, but yeah, everything else, we have that place. Order is definitely going to get triggered soon, but yeah, let's focus on the Euro USD because this is going to be the point. Okay, just waiting for the number. If you have any requests for anything that we didn't have time to touch base, feel free to ask on the chat or request it through chat. I will have a look at it. Okay. All right. Be on standby. Remember, we want to get out on, you know, once one order is triggered, I want to get out from the other one and want to start adjusting my stop loss and whatnot. Okay. Ooh, right. Number should be released now. Yeah, we'll trade gold after the numbers release. I don't want to straddle gold at this point in time. All right, we got a spike up. Orders, Euro USD triggered, Pound USD is triggered. Request canceling. Core inflation, it drops 3.3%. Headline inflation drops to 3%. Monthly rate of change negative 0.1%. That's just bad news for the US dollar. So it should be a little bit of a euphoria for the market. It should be rallying up, right? Okay, we want to start protecting our position. I got filled a little bit too high on this one here, but regardless, I still need my stop loss. Stop loss is going to be dollar yen just got taken out, right? It's just too sharp for dollar yen. We'll wait at a lower price. Pound USD, we can have our stop loss at 1.2870. 1.2870. I want to start moving my stop loss on this one here. I got filled in a little bit too high on this one, on this account. But if you got filled in exactly at about 1.0860, start moving your stop loss, please. Start moving your stop loss if you want to. But right now, you need to have that stop loss at break even, at least for the Pound USD. If you're happy with it, just get out. Simple as that, okay? I start moving my stop losses here. Nasdaq, we're not seeing anything at this point in time, so that's okay. Not the main focus, but focus is on the Euro USD and the Pound USD. Right now, target level for this one here, I'm not going to go too far. I'm not going to go too crazy. We are going to go with 1.09 on the Euro USD. Pound USD, we have exceeded 1.2925. We should start locking our profit to 1.29 at least. Start moving your stop losses up. Okay, so we're good for the Pound USD, Euro USD. It's up to you what you want to do. You know, you want to get out right now. You want to target 1.09. You want to go a little bit nuts on this. That should be okay. Everything is negative for the US economy at this point in time. Core inflation monthly growth, it's at 0.1%, consensus 0.2. We got a number below that. Core inflation also below consensus at 3.3%. Monthly growth, negative 0.1 on inflation. And headline inflation is at 3%. So we saw inflation cooling off. This is below. This is much better than what the market is anticipating at this point in time. Okay? All right. So, oops, what happened? Pull out the wrong thing, but yeah, let's put this back up. Yeah, I'm happy with this. Euro USD, oh, I didn't, where's my target level? 1.09? Okay. Yeah, I should have a target level. What happened with the target level on this one here? All right. I'm happy with this. Right now we are up 36 pips on the Pound USD. I'm gonna close that out. About 17.20. I got feeling a little bit too high on the Euro USD, right? So yeah, you guys should be okay. But you know, I'm very happy with the take profit right now, about 1.09. Feel free. Is it possible for Euro to go 1.0950 this week? I would say yes. I would say yes. Right now the inflation is just. We might see a little bit of a correction potentially. We might see a little bit of profit taking. If it doesn't drop back down below 1.0850, then yeah, there is actually room to go to 1.0950 because any break above 1.09, remember the range that we're looking at on the Euro USD is basically just 1.0850 to 1.09. Once it clears off 1.09, we are actually going to go with this extension here, and that would put the target price to very close to 1.1 actually, not 1.0950. So the room to go, huge potential. All right. I need to keep an eye on the dollar Japanese yen. This is good. I want that pullback because if the dollar Japanese yen doesn't pull back, if the dollar Japanese yen doesn't correct itself, then market is actually at risk of potential intervention. I like this a lot. And remember, this week we talk about our potential support. 160, it's basically what we are eyeing for since Monday. We want that correction to go to 160. And buying on the dip scenario still applies for the dollar Japanese yen. Also in the back of this, it doesn't matter, right? 160, 159, 158. Those are going to be three possible buyback on the dollar Japanese yen. This is going to be a buy on the dip scenario, okay? All right. So this is already pushing up. I think the Pound USD has already hit our take profit. We're done with the Pound USD. Euro USD, feel free. You know, we're very close to 1.09. If you want to stay, stay, but make sure your stop losses are a little bit lower. I'm just going to get out right now for the Euro USD and Nasdaq. We're leaving it. Okay, no calms with Nasdaq at this point in time. Okay. All right, dollar yen. We already discussed that. Let's talk about gold. All right, let's take a look at gold. Right now, can we act on gold? Yes, we can act on gold. We do have a little bit of resistance at 1.24, but this week, in terms of where the R1 is, it's going to be at 2416, 2441. So gold right now, you know, if you kind of have that order anyway, I think you're probably gonna get dragged up. But right now, for gold here, I don't think it's ideal to jump back in on gold right now, especially if you go into a small time frame, right? 50 minutes, we're not even done yet. We basically just got done on the 5 minute time frame. I want to pull back on this one here. Can we measure that pullback? We would anticipate a little bit at about 50% on a pullback. So about 2-3. Let's take a look. I don't want price to go all the way back down here. I don't want it to go all the way down here. If you want to buy on gold right now, just be mindful that your stop loss is going to be 24 bucks. Okay. So yeah, just be mindful on that if you think you want to go with gold. I wouldn't go in right now for gold. We know the numbers, right? Inflation heats up. If FOMC starts cutting interest rate, then gold prices is likely going to continue to push up. Once we exceeded 2,400 today, then it's safer to jump back into the market. Then we would consider that to be any buy on the dip scenario for gold. But right now, do not chase the rush on gold right now. I don't think it's ideal. All right, if you manage to get in on a buy for gold, then you should start locking in your profits. If you manage to create a buy stop, I didn't do that because we don't want to trade gold on the orders. But yeah, if you manage to get in at about 2,380, 2,385, right? What are you aiming for? Today, we are looking at a potential push towards R3 at 2,408. You should move your stop loss to break even. Simple as that. All right. I don't suggest buying gold at this point in time because the risk is just too big. What is the potential gain for this here is about 8 to 10 bucks. Your risk is about 20 to 23 bucks. I don't think it's worth going in on gold. Okay. All right. Let's talk about yen crosses. You guys, like Chuck's probably knew this, but yeah, I'm pro any buy on the dip scenario for the dollar Japanese yen. I like this drop. I really like it, right? I would wait at least on the 15 minutes time frame if we see a huge wick on this one, and if price goes up above 161, because that's where the support 2 is located. All right, this one pierces even lower, 160.75. If price is able to go back up to 165, then yeah, I would actually take a long position, have my stop loss here, and I will be targeting 162. Same thing. This is okay for a dollar Japanese yen because we're only looking at about 40 pips of stop loss, but it is too close. So be mindful because the way I look at the dollar Japanese yen, I do trade this more on the swing. I actually hold my position for weeks on ends. But yeah, I'm happy with this one here, at least on the dollar Japanese yen. We got 161 right now on the dollar Japanese yen. I think it can go lower. I really think this should go to at least 160. I prefer a buy lower at 160, 158, 159. These are going to be the 3 levels I'm going to be looking at a buy on the dollar Japanese yen. Not at the current price level. It is not attractive enough. But if you want to trade it, right, we're banking on price not breaking below 161. So it's ideal if price is able to close back up above 161, you can actually trade it intraday to trade on the dollar Japanese yen. The euro yen, the sterling yen, I think we should see that push higher on the sterling yen and the euro yen because we just had that push on the euro. So yeah, this still followed the dollar Japanese yen. This is why you can see that spike to the downside here on the sterling yen. If we go into the hourly time frame, we are okay. We're good on this one here. This is already exceeded 161.8, and I just don't want to see a close below 207.50. As long as price is trading above 207.50, this is still going to be a buy on the dip scenario for the sterling yen. Can we still go along on the sterling yen? I have zero issues on the sterling yen because on the daily for the sterling yen, we have a lot more room to go towards 210. So I think this is attractive, in terms of whether or not you should trade the sterling yen. Just be mindful. We are looking at least about 50 pips in terms of stop loss, but risk reward ratio doesn't matter because this is really more long-term gain. We are going to be looking at a move closer to 210. So risk reward ratio, it's just great. Right, we're looking at maybe 50 pips of risk, and we're looking at a potential gain of anything above 150 pips on sterling yen. But there it is a much bigger risk compared to anything else out there. Now euro yen, same thing as well. We're looking at that spike here. So the problem with the yen crosses is the concern is it doesn't correct itself too deeply, and that's completely fine because the Japanese yen is working on a different fundamentals. I discussed this a lot. We're still looking at interest rate differentials between the Bank of Japan and all the other central banks, ECB, Bank of England, whatever not. They start cutting interest rate, doesn't matter because the gap is still about 4 to 5% on the difference between the central banks, right? Japan, there are issues that Japan could actually hike interest rate this month. I doubt it, right? They are going to taper their bond, but I don't think they're going to hike interest rate. Plus, if they do hike interest rates, it could just be 10 basis points, max 25 basis points. Still a huge gap. We were looking at 0.3% to compared to 4.5%, 5%. Still a huge gap between the two. So I would patiently wait for the yen crosses. So let's go back onto the dollar yen. I think we got that push lower. So we're not looking at that close above 161. I think this is probably going to approach that 160 level. I'll wait. No rush on this one here. Everything else should already be rallying up. Euro USD continues to rally up. If you still have that position, start moving your stop loss to break even, please, for the Euro USD and the Pound USD. This on my side, it's done in terms of the Pound USD. We're basically back there. And the Euro USD has basically gone to close to 1.09. But I think we're still looking at 1.09 as a barrier, right? No matter how we look at it. I wouldn't go short. It is a little bit risky. But if you're more on the daring side, right? If you really want to go for it, you could trade, you could create a sell limit, but your stop loss, it's not going to be far. It's going to be at 1.0930. If you want to try it out, but you only do this if you're willing to, yeah, okay, I'll take the risk, and then we look at a potential return to 1.0875. You could do a limit order like that, right? It's still going to give you a risk-reward ratio that's 1 to 2, but this could be one of the potentials for what could happen on the euro should it get rejected at 1.09. Okay, I want to focus a little bit more on the dollar yen on this one here because prices just dipped down really quickly. We broke 160, we broke 159. This is a huge sell-off in the dollar Japanese yen. The yen is, okay, what's going on? Do you know what could potentially be going on right now? Come to cross what's going on. Remember last week, we talked about potential of, not even last week, 2 weeks ago. I remember talking about this on the outlook. If the Japanese government wants to intervene, they would intervene when the data is bad. I'm not sure if this is it. Well, let's measure this. We just had a huge drop. Someone is selling off, someone is buying yen at this point in time. Institutional or intervention? I don't know. But this is actually a very rare occurrence that we actually get this in live trading right now. So stop buying dollar yen, stop buying euro yen, stop buying sterling yen, stop it. I'm not sure what's going on here. I need to measure this, but we are looking at a very quick sell-off right now. Remember at the sell-off there for a potential intervention, it's 5 yen. We're right now at about 3 yen. This is quickly approaching that. Okay, I don't know if this is the market panicking, but this is not normal. This is not a normal market condition. We are not able to verify if there's actually a current intervention. I do not think this is an intervention. This might scare the market off a little bit, or there could be a potential test or profit taking. We might see a little bit of an unwinding of a carry trade. That could possibly apply. I don't think this is an intervention. I do not think this is an intervention. But remember 2 weeks ago and last week I mentioned if the Japanese government is smart and if they want to intervene, they would do so when data are bad. Inflation data is soft. Employment numbers was bad. We can look at it 2 ways, right? So the market right now goes to the bull, all right? Do you have confidence in the Bank of Japan in terms of they're going to intervene, they're going to start hiking interest rate? I don't think so, right? So we might see this bounce up. I would like to go long right now on the dollar Japanese yen, right? Right now, I want to go long on the dollar Japanese yen. And Let's go long on the dollar Japanese yen. Okay. 158. I think we came very close to 158. We're going long on the dollar Japanese yen at this point in time. I do not think this is an intervention. Your stop loss is going to be at 158 or 158.25. Give it a little bit more room. It's completely up to you. It is about 80 pips at this point in time. Potential target level, we don't need to go for 162, but if you want to go 162, depends on how quickly we bounce off right now. But yes, I don't think it's an intervention. I think this is a great opportunity because we see the sell off, we see that profit taking. This is currently moving really quickly. I wouldn't go with the euro yen and sterling yen. I would stick with the dollar yen. At least it is manageable. The risk on the euro yen and sterling yen, it is a much bigger risk that we're looking at. But I'll go with the dollar Japanese yen at this point in time, right? So I don't think this is an intervention at all. I just don't think it is an intervention. But yeah. Stop loss. Let's figure out the stop loss. Should we go a little bit lower on the stop loss? This is going to be tough because ideally your stop loss would be here, but that's going to put us at about 100 pips, right? That's going to be about 168 pips actually. Current stop loss is about 125 pips. Yeah. I'm actually gonna do this trade. Risk reward ratio, I think this is fine. It is more than 1 to 2 because we are targeting a little bit higher on the euro, the dollar yen. So, but yeah, what we're looking at right now, I don't think it's an intervention. It does scare me a little bit. I thought it was going to be an intervention. I thought something went wrong. What's going on here? We have a sudden drop on the dollar Japanese yen. We break through 161, 160, 159. I think 158 should hold, and we'll see what happens here. I think a lot of eyes are about 158. So 157, 157.50 is a good stop loss. But again, hopefully I'm right on this one here. I don't think this is an intervention. I'm not seeing continued sell-off on the dollar Japanese yen. Movement on the 5 minutes has already calmed down as well. So we got one huge drop after the news got released, and we just had the sell-off 5 minutes ago. We got a little bit of support at 158.50. But yeah, I don't think this is going to break below 157. So I'm happy with this position. I'm actually going to lift this for a swing trade. This is not an intraday trade. This is a swing trade. If you guys trade carries on the dollar yen, if you understand the fundamentals behind that, you know, this is actually a pretty good opportunity to buy back on the dip. Okay. Starting overbought, I don't think it is overbought. I think what we're looking at, I think we do have a little bit of a scare in the market. I'm not sure how the market is actually going to react. You know, it looks like a potential intervention, but I don't think it is an intervention at this point in time. We'll see what happens. We'll see what happens around 158. This is dropping off really quickly. But yeah, very interesting. Again, very rare that we get to look at this during live trade. We just had a quick sell-off on this one here. Very quick sell-off. We'll see what happens. All right, any other requests on anything else? We'll keep an eye on the dollar Japanese yen here. Let me just set an alert on dollar Japanese yen. We're breaking down. But let me set an alert at 157. So I'll put it at 158. We'll see what happens at 158. Yeah, crazy, right? Just took everything out. Like we were looking at the Euro USD and whatnot, and like yeah, it's irrelevant at this point in time. So Euro USD, you can see what's going on here. It's not moving beyond 1.09 at this point in time. So I don't think there's an intervention. I'll be honest with you. I don't think this would count as an intervention because an intervention would actually see a 5 yen drop immediately. This is still pushing lower. I think we might actually be looking at a potential unwinding for a lot of carry trades. A little bit of a profit taking. Price was about 161.80, right? About 162, yeah, very close to 162. So there could be some profit taking. You know, people are getting rid of the position. This could be a bait, so be mindful. If if it drops, right, to 158, 159, we already passed 160, 160, 159. It doesn't matter. Remember, three keys that we talk about this outlook was 158, 159, 160. The lower it goes, as long as it doesn't dip down below, I think it was a little bit wider, right? It was. Let me see the key levels on the Japanese yen. 154.50 actually. The limit is 154.50, so there's a lot of room to go. But yeah, support 3 is at 158.50 on the weekly pivot. And I mentioned this, I want that drop, because if we don't see that drop, it's not attractive. Buying dollar yen at 162, no matter what you believe on the fundamentals, it's not okay, right? This drop, be very careful. A lot of traders that don't know the mechanics of the dollar Japanese yen or euro yen or sterling yen will probably start selling the dollar Japanese yen. They might look at that and say, yeah, I'm profitable. We just had a 100 pips, 100 pips drop, and I continue selling it. Be very careful. This could bounce really quickly, right? Because we are now at a price where the big funds or people that actually carry trades or institutional traders, we are aiming for this level. That's why I mentioned this in the outlook. We want that pullback towards 158. 158 is an okay price. To me, that's a price I would be willing to buy back on the dollar Japanese yen and hold it until it reaches 165. This is attractive. Omega Trade call has placed stocks and gold on yen remaining. Plans long-term swing on it before this year. And yeah, look, I'll be honest with you. And one of the reasons why I'm still bearish on the yen, I don't think the Bank of Japan is in any capacity to kind of fix this, right? For them to be able to fix this, they need to hike interest rate really quickly this year, at least to 1%. We are 0.1%. That would mean we should anticipate 4 interest rate hikes if the Bank of Japan wants to fix it. The problem is, can the Japanese economy take that rapid interest rate hikes? It's not possible. It would pull the economy back into a deflation, which is not something that the Japanese government wants, because the Japanese as an economy, in the past 30 years, they basically just creep out of their potential deflation. They're looking at inflation number going up to closer to 2%. So if they start hiking it, it's going to pull back that inflation. I don't know what we're talking about right now, but yeah, let me explain a little bit on this one here. So, this is an attractive price. If the Bank of Japan intervenes, it would be a 5 yen drop. We didn't see a 5 yen drop. We saw a 3 yen drop, 300 pips drop. And I think this is more profit taking. This is a little bit of carry trade unwinding. It kind of resets the market. When retail traders starts coming in and say, oh, yeah, let's go short the dollar yen. But the higher probability is a lot of the institutional funds or anyone that wants to carry trade will be waiting at the bottom there. The best case scenario, just be careful on this one here. If you want to short it, that's completely fine. Just make sure your stop loss are good. Right now, if we take a look at what the dollar Japanese yen presents us right now in terms of the stop loss, what's the closest stop loss that we have? It's still at 161.50. Right? This is on the 15-minute time frame. You want to short this? Sure. Your stop loss is going to be up there. That's 300 pips. Are you willing to take 300 pips? Be a potential target? What are we aiming for? Unless you want to go for that 154 down there. 154.50 is basically just going to give you about 1-to-1 risk reward ratio, right? If an intervention happened, then yeah, it would slide there. But if I don't think this is an intervention, we'll see. Any unwinding wouldn't cost a drop to about 10 yen in 30 minutes, an hour time. It will take time. So I would be very mindful of the positioning on any yen crosses at this point in time. Okay, do not recommend a sell. Very dangerous. Your stop loss is about 300 pips, and this is measuring it on a 50-minute time frame. Doesn't matter what time frame you want to take on. 5-minute time frame, your stop loss is still going to be up there anyway. It doesn't change. The fact of the matter is, either 161 or 162. Those are going to be your stop loss. It's either 300 pips or 200 pips. Up to you. The paradox is I don't like the yen crosses movement, right? But I like the range. Yeah, you know what? I was actually counting up, right, the potential entries on something like the euro yen, the sterling yen, just to give you a little bit of an illustration. We're not measuring all the way back in May. If you want to measure all the way back in May, that's completely fine, right? But measuring the movement from June to July, market hit 10 yen. That's 1,000 pips, 1,091 pips on the sterling yen. Euro yen, it's about the same. It's about the same price. I think about 500, or it could actually be a little bit higher than that. But let's, if you want to know what's going on here. But yeah, let's measure from the 4th of June all the way up. It's about 7.5 yen. 750 pips. It's huge, right? If you get one movement wrong on any of the yen crosses, it would destroy your account. If you know how to trade it, it will be a wonderful journey. The past 2 years, any more room to go to the upside potentially? Yeah, but only if you understand the yen crosses. If you don't understand the yen crosses, it's super dangerous. Okay. All right. Nice XP on imagination. Lovely waterfall on the yen. I was waiting from last week. Definitely. I'm waiting for this fall. Don't get me wrong. I don't want to sell the Japanese yen. I don't want to sell euro yen. I don't want to sell sterling yen. But I'm waiting for that huge fall to happen. If the fall doesn't happen, I can't get back in. Long-term wise, we're still looking at yen weakness going ahead. It's not going to end. It's not going to end until the Bank of Japan says, look, we are going to start hiking interest rates. Until we have that clarity, no way. All right. This month, we're going to get the bond tapering. Bond tapering, the meeting that they had, was it last week? No, it was this week. I think the bond tapering, it was on Tuesday, I believe. Bank of Japan met with bond traders, market participants in the bond market, in the treasury market. And some people are saying, they should taper slowly. Some people are saying they should taper quickly. But, we'll see what happens. They're going to release that taper. And this is Bank of Japan that was supposed to announce it last month. They didn't announce it. This month, they're going to announce it. I don't know what's going on. But can they give a confirmation to continue hiking interest rate? I doubt that. All right. I don't think this is Kishida right now. This is pure Ueda stuff right now. But yeah, that was fun. Okay, so Euro USD and the Pound USD. Hopefully you guys managed to get on those two trade. If you guys close out, that should be fine. We're looking at market just coming off again. So what I'm looking at is the Euro USD. We're obviously facing a very tough resistance at this point in time. If you're wondering why is the Euro USD stopping there at 1.09, what's contributing that? Isn't the dollar weak at this point in time? The euro yen is pulling it down because the fall on the euro yen is significant as well, right? So it balances out. It pushes, it pulls the market in a way that the euro USD is not able to gain as well. So it's not just the dollar that's being smashed by the market. Obviously, the pull from the euro yen, the pull from the sterling yen. This is why we spend 20 minutes explaining what's going on with the yen crosses. It's important that you understand. Even though it's not going to be impacted by the market directly, but what happened with the dollar Japanese yen, it's going to play out on the euro yen, it's going to play out on the sterling yen, it's going to pull the euro, it's going to pull the pound USD. So yeah, I would say if you get your profit, just get out on the euro USD and pound USD. It should be more than enough. Otherwise, you risk a potential of market pulling back on the euro USD and the pound USD. Okay, cool. All this charge are probably not necessary at this point in time. We cleared it off. But yeah, again, the code is non-farm 2024, valid until the 31st of December 2024. So with that, let's wrap up this month's trading session on the NFE, CPI. So just be mindful. I think this turns out to be a potentially good explanation on the yen crosses. If you like what I just discussed, if you want to share it to your friends, give them this link. I know it's titled inflation, but we did trade the inflation, and inflation right now has a little bit of an impact onto the yen crosses. I think we see a little bit of a scare in the market that there's some position adjustment on the dollar Japanese yen. I like it. I'm completely fine with that. All right. Thank you all. Stay safe. Have a good night. Have a fantastic weekend ahead. And I'll see you guys next month for the next live trading session, which is obviously going to be in August for the NFP numbers. But yeah, good luck with your trades and keep an eye out on the outlook every Monday.